Hello everyone. This is the pre-market report video for today, April 24th in the Indian stock market in terms of Nifty and Bank Nifty. On Friday, for the third straight day, Nifty closed flat. If we see the difference between the Tuesday closing to Friday closing, it's only 36 points. However, FIA started to increase their pace of selling. Last week, they sold for over 4,500 crore rupees and Friday alone, they sold for over 2,100 crore rupees. While DI were still supporting but not as much as FIA selling, last week they bought for near 3,000 crore rupees and on Friday they bought for near 1,650 crore rupees. On Friday, the main reason for the flat trading was mainly due to the anticipation and expectation around the quarterly results release of two main index heavyweights, one Reliance Industries and the second ICICI Bank. So let's see in detail about those two results. First, Reliance Industries. This is the results preview that is shown on Friday morning about the market expectation. If required, please pause it and have a look. Here, in terms of revenue on year-on-year basis, market expected to grow over 9%, but it grown only by 2.1%. Whereas in quarter-on-quarter basis, the consolidated revenue contracted at 1.9%. However, on the positive side, their profit after tax increased near 20%, which is really very good. After the results declaration, Reliance GDR in Europe closed over 1% positive. In one simple sentence, their profit beats the market expectation significantly. However, their revenue didn't and in quarter-on-quarter basis, it contracted marginally. That's the overall story. On segment-wise, their telecom business Geo platform reported the record revenue and profit. Again, that due to the full impact of a tariff hike, expansion of fiber optics and the implementation of 5G services. Regarding 5G, at present in India, they have rolled it out to over 2,300 cities and towns. Then about Reliance Retail, they too posted the strong growth. However, their oil to chemical business, it declined in their revenue due to the sharp reduction in crude oil prices and lower price realization for downstream products. Here too, on the positive side, despite these challenges, O2C segment still achieved its highest ever operating profit. Moving on, Reliance made a significant progress in the green energy sector as well with the implementation of new energy gigafactory at Jamnagar. On the weekend, Morgan Stanley, one of the biggest investment bank in US, released the report that Reliance overall earnings were 7% above their estimates after adjusting for a lower tax rate. However, again, it's not all positive. 1.5 years ago, when I valued the Reliance Industries share price, their net debt was around 2,000 to 3,000 crore rupees. Then, at the end of last financial year, it was around 30,000 crore rupees. Now, that increased to over 1 lakh crore rupees. The worrying thing here is, they mentioned in their presentation that their plan is to maintain their net debt to equity ratio to below 1. At present, their EBITDA is near 1,50,000 crore rupees, which means they are going to borrow more 50,000 crore rupees. Anyway, for the moment, the full result is positive. If any of you interested in valuing a Reliance stock, I'll attach the link in the description and in the end of this video. It was one of my earliest videos, so please cut some slack, but I believe it's a good video for share valuation. Then coming to ICICI Bank, in one simple sentence, it beats the analyst estimation on all directions. I mean, profit, revenue, net interest margin and the NPA, it beats every analyst estimation. Basically, ICICI Bank posted one of its best quarterly results. On year-on-year basis, net profit increased over 30% and the net interest income increased by over 40%. And I don't know how many of you agree with me. In India, for banks, the simple share price valuation is based on their net interest margin and their net NPA. Kotak Mahindra Bank always has the highest net interest margin than any bank and reasonable low NPA. For those reasons, market values Kotak Mahindra Bank to over 28 P ratio. And it's similar for HDFC Bank. Most of the time, HDFC Bank has the net interest margin of near 4% and at present it got the net NPA of 0.27%. So, despite having the uncertainty around HDFC Bank-HDFC merger, market values HDFC Bank near 20.5. Now, coming to ICICI Bank, this quarter their net interest margin increased from 4 to 4.9%. They beat the HDFC Bank for the first time. And net NPA dropped from 0.55 to 0.48%. which means it's kind of started to fall near Kotak Mahindra Bank's P ratio territory. Here, don't take this as a stock advice, but it will be good for study purpose. I mean, at present, ICICI Bank is trading below 19 P ratio, so I believe there is a high chance it might increase at least near to 21 P ratio territory. Anyway, overall, I believe ICICI Bank posted a very good result and it will be huge positive for that stock. Coming to US market, there too on Friday, all three major index closed near absolute flat. I mean, US market was also waiting for the big companies' results. On Tuesday, Microsoft and Google results are scheduled to due. Then on Wednesday, it's Facebook. And finally, Thursday, Amazon is scheduled to report their results. So, 4 out of 7 largest US companies are scheduled to release their quarter results in the next 4 days. Regarding oil, after crashing near 7% in 1 week, it increased marginally. And at the time of this video, WTI crude oil is trading at $78 per barrel and Brent crude oil was traded at $81.5 per barrel. Before moving on, this week, US GDP data on Thursday, PC inflation, employment cost index and Eurozone GDP are due on Friday. So these are some of the very important items we need to keep monitor for impact. Coming to Indian areas in US market, the areas closed on Saturday before the ICICI Bank results, but still both the banks able to close significantly positive. In that, only Wipro decreased marginally. Again, there too during the weekend, Wipro management made the announcement that they are going to buy back over $1 billion worth of Wipro shares. That news was not factored in the ADR price, so I consider that as positive. Then about SGX Nifty, on Saturday morning it closed at 17,660, which means it's kind of indicating gap up opening of 40 points. As a summary, at present, global momentum kind of paused or neutral. However, there are various India-related positive news such as Reliance and ICICI Bank results and Wipro share buyback. So, let's hope for the positive trade. However, there are some geopolitical escalation in Sudan. I don't know how to assess that impact on stock price. Similarly, during the weekend, one of the largest retail chain in US, Bed Bath & Beyond, filed for bankruptcy. So, there is a chance US future market during Indian market hours might turn negative and impact Indian market negatively. Then, about the things to look out. Today, IndusInd Bank, Century Textile, Bank of Maharashtra and Mahindra Logistics are some of the major Indian companies' earnings results are scheduled to release. And in terms of macro, during the market hours at 1:30 p.m., Germany's Business Climate Index is scheduled to release. And I believe that is the only one important macro that we need to keep an eye out for. Around 10:30 a.m., Singapore inflation is due. Here, as long as no major big change, we don't need to worry about its impact. Just for info, on Friday, our bi-weekly bank's deposits increased over 10% and the credit growth increased over 15%. No surprises there, but the positive thing is from Forex Reserve. Despite the pressure on rupee during the last week, Indian Forex Reserve increased to $586 billion against expectation of near $582 billion. Coming to technical, in daily chart, Nifty forms a fifth consecutive bearish candle. However, the good thing here is it's a short bearish candle with a medium upper and longer lower shadow. Basically, it's a hammer candle or to some extent we may say a doji candle. As we discussed a lot of times, if the same candle forms during the price advance means, then it's called as hanging man candlestick. Now it forms after a small price decline, so we can say it's a hammer candle. Here, what this candle is telling was, there was a strong selling pressure initially, but by the time of close, buyers were regained the control. This kind of signaling the price was bottomed out and possible upward movement. Just one more thing, here on the positive side for the fifth straight day, Nifty defends 17,600 and took support at 200-day moving average. So today, if Nifty moved below 17,550, then it will drag further down to 17,400 zone. While if it moves on the higher side, then 17,700 will be the immediate hurdle. Anyway, at present, Nifty is trading near and traded at same small band for 5 consecutive days. And I checked the historical data for whatever the index data I got. In that, whenever it trades in the same place for more than 3 candles, at that time the most frequent and probable scenario was moving above. So I believe it's kind of hinting at the possibility of bounce back. But sustaining that in short term, I strongly believe that should be based on the global momentum. Then about Bank Nifty, it forms a medium bearish candle with minor upper and lower shadow, and it's too similar to Nifty as it trades in the same band for the last 4-5 trading sessions. Now, if it moves above 42,500 level, then there is a high chance it will move up towards 43,000 to 43,250 levels. On the downside, if it drops below 42,000, then it will further drop to 41,500 levels. Coming to moving average and technical indicator summary, for Nifty on the daily chart, there was no change and same for last 3 trading sessions. At present, it's above 8 of the 12 observing moving averages. So the summary is buy signal. And most of the technical indicators are indicating buy call. So there the summary is strong buy signal. In case of Bank Nifty, both moving average and technical indicator summary is indicating a strong buy signal. From option change in open interest, there were a lot of new call options were added at 17,700 and above 17,600, and very small quantity of new put options added at below 17,600. So 17,700 is the immediate significant resistance. Then regarding overall options open interest data, 17,700 also got some significant put options and only 17,500 got less call options with significant put option open interest. So 17,500 is the support to look out and 17,800 is the strong resistance. Then coming to Bank Nifty, based on change in open interest, huge number of call options added at above 42,000 and 42,500 got maximum new call option. So 42,500 is the immediate resistance. And based on overall options open interest data, huge short straddle were present at 42,000 and also some in 42,100 and 42,200. The maximum put option open interest without significant call option is at 41,500. Thus 41,500 is the support to look out for. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the algorithm and will also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.